Hey, what's up, family? Houston checking in with you. Did you all know that there's actually 4 types of payday loans? And I know a lot of people said, well, payday loans are bad, all right? However, people do not tell you the breakdown of what type of payday loans are bad, okay? Because some payday loans will help you get out of a situation. Right? And so what I mean is that we end up in situations sometimes out of our control. You know, the landlord increases the rent. We may have some car problems, a family member that needs some help right away, you know, and we are the only ones that they can count on. So life happens to where you have to end up getting a temporary payday loan. Now, the bigger challenge for most people is, one, they may not know or understand the type of payday loans, okay? And so they may grab a payday loan that has a higher interest rate on it. Now, here's the thing about it. If your situation is that you have bad credit, you know, and you are pretty much known for defaulting and stuff like that, can you blame a creditor for charging you high interest? Because it's there, right? You already showed that, hey, I don't pay my bills on time, I don't pay people back. So when you have to turn to a creditor, and the main reason you may turn to like a high-risk payday loan lender is because, again, life happens. You know, you may have to move right away, or again, you just, life happens. That's the reality of it. So here's the thing about it. Let me tell you the 4 types, and then we can discuss it so you can understand. All right. So then the one that charges you the highest interest rates is usually like a tribal lender. Now, I told you guys, with tribal lenders, those are the type of lenders that are, you go to the casino, okay? So you go to the casino and you lose your money at the casino. Then those casinos, they set up these shops online or offline. They get their license to lend money and stuff like that, and they loan that money back out at a higher interest rate. So they're called predatory loans and stuff like that, because they try to charge the highest interest rate. But understanding that many times these people are still gambling, because most of the people that come to them for these type of loans don't ever pay the loan back anyway, right? And it's very hard for them to take any legal action, because these people more likely are probably only borrowing a couple $100. So are you going to spend a couple $1,000 just to collect a couple $100? So understanding why they're charging a high interest rate. I'm not saying it's right, but you have to understand and put yourself in their shoes. They don't know you. You coming to them, you already showed them that you don't pay your bills and stuff like that, and now you want them to take the opportunity to give you a second, third, or fourth chance, right? So just keep that in mind. Now, you also have your banking credit unions. They have PALs, right? And so with those type of loans and stuff, again, you have to have deposits. You can't have any overdrafts. Usually you have to be with the institution anywhere from 90 days up to a year before they decide if they're going to give you a unsecured loan, okay, with bad credit. All right. Now, these type of loans with the banks, they can go anywhere from $100 up to a couple $1,000s, in which I'll explain those in a minute. Now, you also have CDFIs, okay? So with CDFIs, you have Community Development Financial Institutes, all right? And these here, again, these type of lenders, they're set up in the community for people that are struggling to get approved for a loan, okay, because of their credit, right? It isn't because they have good credit. It's because these people have been struggling to get qualified for a loan because they don't know how to manage credit. They may not understand credit. I came from a town, like a lot of the people in the town, you know, they really didn't understand credit. Okay, the majority of the people, the only income they mainly had was welfare, food stamps, disability. Yeah, you have people that go to work and stuff like that. But however, for many of them, in terms of understanding that, hey, you can leverage your credit, this is one of those towns that was very limited to that knowledge. Okay, so that's the reason why now I really take it on myself to try to explain to people around the country there are other options. All right, now you also have cash apps, right? So you have the cash apps. You can get a loan as well, payday loan as well. So you have 4 different types of payday loans. All right, now let's talk about like with your tribal lenders. Okay, so with your tribal lenders, you're talking about like with Rise Credit, you're talking about with Uprova. Now with those type, they'll being direct tribal lenders and stuff, of course their interest rates is definitely going to be much higher. Again, you don't have to go through all the red tape as if you're going through the banks and stuff like that, right? And so they charge the higher interest rates. So you have Explore Credit, another one. Explore Credit, and with the tribal lenders, they're not in all 50 states. However, like with Rise Credit, Uprova, they go up to $5,000. Explore Credit goes up to $2,000. All right. So just to give you a perspective in terms of the type of lenders. Now, you also have platforms that deal with tribal lenders. All right, like you have a low credit finance. Now, the interesting thing about low credit finance, although they deal with tribal lenders, their interest rates is averaging 5.99 up to 35.99. Okay, so oh well. Here's my favorite car, guys. The Corvette. And I think that's a C6. Is that a C6? It doesn't say. It's probably more likely a C6. So that's my favorite. However, going back to, like I said, low credit finance, they'll go up to $50,000. Now with that being a platform, and again with tribal lenders, minimum income after taxes usually about $500, right? And so they're working with people that are on disability, that's receiving government benefits besides the unemployment, also as well as working a job, a W-2 job. Okay, so that's the thing about it. That's where the difference in the flexibility comes in at, because although they charge you a higher interest rate, they don't have to go through as much red tape to get you qualified, even if you have a 300 credit score. So that's the difference with them, all right, because they focus on the income. Now, you also have, like I was stating, the banks and credit unions. So like with a U.S. bank, what's that? Oh, the way he's going back and forth. I guess he assumed that he was going to buy a car, but a truck, but I guess that ain't gonna happen for him. Now, as I was saying, going back to the banks and credit unions. With banks and credit unions, they go from 100. You can go up to 2,000. Some of them will offer you even 3,000. Just depends on the institution. Like with U.S. Bank, they'll go up to 1,000 with no credit check. Okay, Wells Fargo will give you 500. Bank of America will give you 500. Now, in reference to credit unions like DCU, they will go up to $2,000, right? But their interest rates is not going to be as high as your tribal lenders. However, you have to be a member with those institutions at least 90 days or longer in order to qualify with them. All right, so that's the reason why, like I said, a lot of people end up with the tribal lenders, because you don't have to be a member, you can just get the loan, right? So that's the reason. Now, you also have CDFIs, Community Development Financial Institutes. And so like with CDFIs, you have people trust loans, all right? They go up to, I think it's $10,000, right? Because it's a CDFI. Then you have Opportune, is a CDFI, Community Development Financial Institute. They go up to $10,000. You have the Economic Justice. They go up to $10,000 as well. Now, those are CDFIs. Now, with CDFIs, they look at other metrics as well as the credit. Okay, so that's the difference. Like with your bank and credit union, they already know that you have on-time deposits and stuff. So by you having those on-time deposits and everything, that's why they're okay. And you've been with them for six months, 90 days, 6 months, or a year. So that's the reason why they're okay. And then you also have the cash apps, right? And so like you have like Chime. You sign up with Chime, open a checking account, they'll give you $200. Then you have Dave, that it goes up to $1,000. So you have those type of lenders as well. So you have an option of choice. However, again, where most people get in trouble is because when at the last moment you have that emergency and things of that nature, you're trying to find somebody, especially when you have bad credit, you're trying to find somebody that really is going to take a gamble on you, okay? Especially when you can't go to friends, when you cannot go to family, because they're in the same situation as you, so they can't help you, right? So that's the reason I tell people, all payday loans are not the same. They're not the same. It's just in a matter of where you're actually getting a loan, and in reference to the interest rate. So you now understand that you can find favorable interest rates on payday loans, but it just depends on where you're getting it from. All right, so I hope this video helped you. If you have any other questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.